This November's market report is stuffed full of giblets of information. You're going to want to stick around in here.
Well, hey, thanks for joining us today. I'm Blake Buttram. This is Matt Minton. We're with Arkansas Retirement and Wealth. And we were just wanting to have a little fun with that. I hope you enjoyed the take on the start of it. And then at the end, be sure and stick around because we had a little trouble filming that without laughing. So I think Gibby's going to put some stuff in at the end. But today's Wednesday, November 19th, and some information just came out regarding NVIDIA, which is going to obviously affect the entire market. So just wanted to knock a market report out because next week is Thanksgiving and, obviously won't be here to do it.
Right. So you guys may have noticed that we've seen some a little bit of shaky ground this month. I think we hit our peak on October 29th of this year in the S&P 500. We were up there looking like we were going to flirt with that 7,000 number. It got up to a little over 6,900 on the S&P 500 before falling back down. Now we're in the 6,600 range. But we've been seeing some bad jobs data that's been coming out, and that's been a lot of that. Of course, there's tariff things going on in the background as well, but a lot of this is jobs data. And we've got it written down here just so we can recall. Amazon announcing 30,000 layoffs. A lot of that is being gobbled up by AI.
Pun intended.
I'm sorry, I tried to do that without laughing. But AI is responsible for a lot of that, and then we've got UPS that's announced 30,000 layoffs as well. Goldman Sachs announcing layoffs. And one thing to keep in mind I know that sounds really scary, but something that we have to think about is I had read that we had 54 months of consecutive growth since the COVID-19 pandemic in 2020. So we've had this I think it's the third largest run in history of consecutive month after month job growth that we had. So we've had that really long spell of job growth. And then we've also had, when did they start raising rates? 2022, 23?
Yeah, I think it's 22.
2022. And
Don't quote us on that.
Yeah, it was around that area. You guys remember the year that was. That was the year that the market was so bad here a couple years ago. But whenever we have interest rates rise like that, oftentimes we'll start to see big job declines. So here we are now coming up on 3 years of these interest rates having gone up, and we're just now starting to see some of those declines in the job market. And that's actually a pretty good sign because we're seeing those declines right as we're beginning to lower the interest rates back down. So the last couple times the Fed has met, they've decided to lower interest rates a little bit. Not big changes yet, but the fact that we're starting to enter into that lower interest rate environment, and we're just now seeing some of the jobs be affected is a pretty good sign for the economy long term.
Yeah, we've also got, it's been in the news that Michael Burry, he rose to fame right after the global meltdown of 2008. He bet against the housing crisis and made who knows how many billions upon billions of dollars. Well, he has also bet against this AI bubble that everybody is calling it in the market now. If you look at the S&P 500 alone, I didn't realize it until about 2 weeks ago, but NVIDIA represents about 8% of the S&P 500, which it's just crazy to think that. And you would have to be living under a rock to not know what that company does, as far as building supposedly the best computer chips in the world. And, Matt mentioned tariffs. That's a big deal because a lot of that stuff goes to China, and, our economies, they kind of play off of each other. So who knows how that's ultimately going to end up long term. It is obviously a concern of mine that much of our economy that much of our stock market is tied to one individual company. But then you look at all the other AI companies out there, very, very big deal.
That's like, there's 500 companies in the S&P 500. That's like if there were only 12 equally weighted.
Yeah.
That's how huge it is.
It's nuts, yeah. And then just now, so we chose to do this video after NVIDIA came out with their earnings, which they came out with about 45 minutes ago. And they blew away all the estimates that all these Wall Street analysts were talking about. After market hours, their stock before we walked into this room was up about 3.5% after market. Who knows what it's going to be tomorrow? But obviously, that looks like a good sign for our economy going forward, just because so much of that, like Matt said, it's just a huge portion of the S&P 500 right now. Warren Buffett, he's been in the news lately. Everybody, he's the Oracle of Omaha, probably the most influential stock picker of our time. He actually is stepping down at the end of the year from Berkshire Hathaway, from being their chairman. Already has his replacement picked and all that. But one of his most recent bets, he put $4.9 billion into Google AI. It's just astronomical amounts of money. The other things that have been in the news are these tariff checks. I don't know how many hundreds of millions that our country, the Treasury Department, has brought in from these tariffs. But one of the things that is being floated around are tariff checks. I've heard 2,000, per person. But it's just kind of been thrown out there. There hasn't been any concrete steps behind that. How that's going to get to you, whether that's going to be a check like we all received or most people received, and just a paper check from the Treasury Department back whenever we were doing the stimulus stuff, or if that's going to be a tax credit. Who knows how that's going to play out. And then Trump also came out last week. We've been questioned on this about these 50-year mortgages, which is crazy to even think about. But I think the whole basis behind that was making housing more affordable. I was reading something not too long ago, and they said back in the 80s, whenever interest rates were, roughly where they are now, after they had obviously come down a little bit, but the average home price was under $100,000, and now the average home price is over like $450,000. So, it just takes a lot more to get into a house these days, and it's almost priced some people just out of it, eternally. You can't ever get ahead because interest rates are so high, even though they are coming back down, as Matt mentioned. It's still, 50-year mortgage, even though that sounds scary to think about. But it would make housing more affordable for many, many people. So the last thing we want to hit on are interest rates. Matt kind of mentioned it. We've had 2 drops here in the past quarter. The Fed is supposed to meet again on December 9th and 10th. What do you think they're going to do on rates?
Well, I don't really know.
Yeah.
I don't know if the market has anything priced in just yet about what they're going to do. It would not shock me to see a 25 bip lower, and it wouldn't shock me either to see them keep it like it is.
Yeah. The more things I read, the more I'm inclined to. Granted, anything could change in the next 2 to 3 weeks, but kind of keep them where they are.
Yeah. I know one thing that Powell would rather hold them too long up than go down too fast.
Yeah.
We still haven't really hit the target inflation rate. I think it was 2.5%, somewhere in that neighborhood. His target's 2. We've gotten close to it, and that's why he's agreed to go ahead and start lowering it. Of course, we look at some of these job reports, and it may start to change his mind to go, we do need to lower them a little bit more. We'll just kind of have to wait and see there.
And then it hurt with the government shutdown, the longest shutdown in the history of our country, that a lot of those numbers weren't readily available. So they're kind of flying blind there. So
I wanted to go back real quick on the 50-year mortgages. If they do still continue lowering interest rates, which we've talked about before, that I think that after May of next year, it's going to start to be pretty rapid. But if they do that and they start these 50-year mortgages, something that you have to consider is what they're trying to do is let people into the housing market that haven't been able to afford it, just like you mentioned. But if we introduce a new segment of the population that's now buying houses, just keep in mind that that's going to make housing prices go up. Right now, if we have 15, now I'm not saying good, bad, or indifferent. I think everybody should be able to afford a home. But if we have 15% of the population of people who can't afford to buy a house and they're renting, and then now we introduce this and they can't afford to buy a house, and we increase by, that's a 20% increase in the people who are looking to buy homes. Supply and demand.
Look at what happened during COVID. Whenever interest rates were nearly zero and homes were over asking, and
Yeah. So if you're thinking about moving, you might move soon.
Well, we appreciate you hanging with us today. Sorry for the the goofiness at the start of it, but
I'm not
you're
sorry.
not sorry. Well, you should have seen how hard it was just to get out what we actually got out. So anyway, hopefully you'll join us next month on, I don't know the exact date that we're doing it, but I'm sure it'll be after the Federal Reserve announcement in mid-December. So you can always reach us at 501-623-7066. You can hit us up on email. It's info@retirearkansas.com. And we always encourage you to like and follow our Facebook page. We try to put as much stuff out there as we can, and then which obviously trickles to our YouTube page. So anyway, y'all have a happy Thanksgiving.
The November market report is stuffed full of good I'm sorry.
2.
The November market report is stuffed. Why'd you look at me?
You should have. Don't look at me.
Okay.
All right. 3, 2.
This November market report is stuffed full of I'm gonna get it out, okay? I really want to get it out.